Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. We're recording the show today on Remembrance Day, November 11th. And just as we were coming on air, Jerry, I was just looking at how the prices of metals have done this year. Silver in Canadian dollars is up 70% this year. It's up 74% in US dollars. Gold is up 52.7% in Canadian dollars and 56.8% in US dollars. I want to start with a question, Jerry, just to help people who are just looking at prices but not necessarily the stories behind the prices. For a layman, they might look at that and say, well, yeah, the dollar's going down. Is it as simple as action reaction?
Sometimes it is, Jeremy. You know, when we compare gold and silver versus all major currencies, it's very clear what is truly volatile. When we're told that gold and silver are volatile, no, they're not. What is volatile is the currencies that are underlying all of your assets, all of the food, all of your insurance policies that you have to renew, your mortgages, everything underlies that currency. That's what's being devalued. Why? Because the strategy and the equation is very plain and simple. All they're doing, our central planners, the banks, the central banks, they print currency.
Is there a currency that could be considered safe? You know, in the past, there was the Swiss franc. What about the Canadian dollar? Is the Canadian dollar better than the US dollar right now?
Well, there's no association with precious metals. The Swiss franc used to be closely associated with the gold market. And they were also associated with being a neutral, a place where you could park money because they're a neutral. They had the neutrality when it came to foreign policy. However, that went total 180 when everyone and all of Europe was sanctioning Russia. Switzerland did the same thing. All currencies, I think what we're seeing is an agreement almost to let's devalue. We have a lot of debt to deal with. The global debt is approaching 400 trillion. The US is had already steamed past 38 trillion. Canada's also in the trillions. There's just currency sloshing around left, right, and center. The agreement, similar to the 1985 Plaza Accord, was to, hey, let's agree to devalue so it's a little bit more orderly. There's not going to be a potential fallout. We could renew, we could refinance some of the debt, but you have a life preserver countries. Let's amass gold and silver. Let's amass precious metals because these are the monetary metals. They're the only two precious metals, and that word precious connotates that they are monetary. We're not talking about a base metal, some other commodity. People ask us all the time, what about copper? Should I buy and invest in some copper? Go ahead. Copper is a critical mineral, yes, like silver, also a critical mineral. But for thousands of years, what has survived as money and the monetary metals is plain and simple because they're divisible, durable, portable, recognizable, and scarce and intrinsic. And those two metals are gold and silver.
What about the fact that Canada doesn't own any? Why do you think that they have elected to not own any physical precious metals? I know it's pure speculation, but speculate for a second.
Yeah. I mean, you look at that policy. I think in 2016, Trudeau came in, he sold the last little bit off.
Whose recommendation was that on, by the way?
It was definitely Britain and the UK, and Mr. Carney himself, who was the Bank of Canada's governor at the time. His allegiance, very clear. It's very similar to Gordon Brown when Brown's bottom was called, and he just dumped gold at the wrong time.
Interesting. Both became prime minister.
Interesting. Very interesting stuff. Where's that tinfoil hat?
But what's interesting as well is that Canada has a lot of gold. It wouldn't be so tough to go out there and dig it. In some ways, it's kind of better that they leave it there.
I know.
Because if it was above ground, it'd probably already been sold.
Yeah.
So I kind of feel like maybe it's better to keep our riches in the ground at this point.
I think so, because it also bleeds into the conversation that we talk a lot about, which is the confiscation talk. And we know that they've been quite open and apparent to really steal your wealth through inflation. Number one, that stealth tax of inflation is no longer any stealth, but the confiscation talk of, prior, in 1933 Gold Confiscation Act, everybody owned precious metals. Today, there's been a campaign since the 70s to get you off of that gold, sell that gold. You don't need it. Buy the certificates, buy the ETF, buy some sort of proxy that will represent gold and silver. Don't own it. And to their, they succeeded in that. Less than 1% of the Canadian population own gold. And you know what? If we didn't have that gold in the ground, because that's my argument, it's a lot easier to get the gold in the ground to get an ounce of gold from me or you. Because to be honest with you, those who own precious metals, wink, wink, they're pretty prepped and they're ready to go.
There are a lot of strong hands out there. But speaking of, trying to get you to not own it, one of the things that you'll hear from people is the cost to store it. Well, there's a cost to store it because when you have these investments, there's no cost to hold an investment. There's no cost to own a stock. And sometimes they actually pay you to hold the stock. There's no guarantee of gains, but they'll give you a dividend or a yield, etc. So with precious metals, though, at least when you're holding your own physical gold and silver within, let's say, a registered account, the cost is just over 1%, which is negligible if you're looking at a 70% increase in a single year. That's close to 70 years worth of storage and done, right? But how do you help clients overcome the concern with a cost of doing business? I know, for example, being in business means there's cost of doing business. If you want to own a restaurant, there's a cost before you've even opened the doors. You've paid the cooks, you've paid for the linens, you've paid to have staff, you've paid to order the food, to order the alcohol, and then you open the door and you hope that you make more than you've spent. That is business, right? Do you approach precious metals as a business, or do you approach it like insurance? You have to pay to have insurance, for instance. How do you help clients overcome the concept of there's a cost involved?
That's a good one. And I think you bring in a few tools, and obviously you have to have our resources handy. Here at Guildhall, we have our resources handy. We have history. Now, we understand that if we look back, those costs and expenses to operate a company, your business, keep the lights on, keep the employees happy, well paid, well fed, keep the lights on, and insurance. The costs are moving up. The real rate of inflation is much, much higher than the 2-3% that the government touts. It's really gaslighting, especially if you're in business. You know that you're paying way more. So what is a better option than precious metals? Is the 1%, around 1.25% to hold the precious metals in an insured, independent vault facility under your name, true ownership, liquidity intact? Is the 1.25 a game changer? Absolutely not, because what are the other options? To chase a yield, to get some sort of a yield, you're paying an MER, a managing expense ratio. Even if you want to get a good metals fund, the MER, I looked at one yesterday, it was 1.3%. Sure, it offered a 0.8% yield, but I was like, wait a minute, you're managing paper? This is real. With precious metals, you're storing something like a boat. You have a boat, you need to keep it at the marina. So there's a real asset. You're willing to pay for it.
Well, hold on. Hold on. I'm going to push back on you on that one, because they say the best day of a boat owner is when they buy their boat, and the second best day is when they sell it. So I don't know if I want to compare it to that.
True.
But definitely with gold ownership, it's certainly tough to sell right now. When you think about how easy it was to accumulate gold when it was $1,000 or $2,000 an ounce, and now it's selling for over 5,000 Canadian. It's a tougher buy today. However, and we've had some great gains, yes, but I'm so excited about where the market's headed from here. I was listening to Chris Vermillion on Daniela Cambone.
Great follow.
He's calling for $5,000 by the end of the year. You've got Michael Oliver that we've discussed before with his momentum strategies, structural analyst.
Follow.
And he's revamping his forecasts. He's saying silver to 100. And when you think about the debts and you think about the finite nature of silver, and we're going to go into some of the usages for silver. Wait till you hear about one of these major usages and how much it's just going to be decimated from an inventory standpoint. The finite nature of gold and silver, where you can only add 1.5% to the stockpile every year, is very similar to that concept that is pushed forward by the cryptosphere of saying, look, there's no more Bitcoin in the world. Well, it's going to take you almost 100 years to recoup the amount of gold that's currently out there.
Yeah.
So we're kind of all in the same boat here in terms of limited supply. So I'm very excited about where the markets could be headed, and another $1,000 move up in gold over the next 6 months potentially is got me very excited. I'm not worried about storage costs. I'm not worried about the cost to get involved in the market. I want more physical gold and silver in my hands.
Absolutely. To pay 1%, to get back multiple times. I mean, we're already up 75, 60%. To pay 1%, to first of all ensure your wealth, but then position yourself for what's happening, what's going to happen in the market. There are strategies that we will employ. There is a silver to gold strategy where you may want to be able to sell and get into gold and maybe shrink down your wealth to be able to pass it on to next generations. This is what we can do for you, and to have it stored offers you that liquidity. At the end of the day, some type, high net worth individuals, they could care less with all the papers that we have on this desk, Jeremy. They can care less about the fundamentals. They can care less about, at the end of the day, Jerry, they ask, how quickly could I sell it? Well, gold bears the number one market cap globally, the largest market in the world. This is the reason why central banks require that reserve, because it's a large market. It offers them two things that they need: liquidity and decoupling their wealth from the financial the calamity that's about to happen. But you know what? It's also the solution. These are tangible strategies for tangible solutions.
The number 18778 silver, the website guildhallwealth.com. This is an incredible opportunity for you to protect the wealth of your family and of yourself, and to also take part in the revaluation that's currently ongoing around the world in the physical gold and silver market. The number again to find out how to learn how to hold physical gold and silver as part of your registered account portfolio for your retirement. The number 18778 silver. The website guildhallwealth.com. The last couple weeks in the market have been very interesting, everybody, because at the beginning of October, the market started to really run. Silver got over $50 an ounce. Gold got well into the 4,000s, and then it stalled out. Now, there was some stuff going on at the LBMA, and there were massive shortages, etc. And then all of a sudden, silver gets slammed back down from about, I think, a high of $53, $54 an ounce to around 47-ish. And there was a lot of anxiety in the market. Obviously, a lot of people were jumping in above the $50 mark. But people who had been buying, early October, all of a sudden they were right back to where they started a whole 2 weeks ago. Nonetheless, we're all laughing about it now. Nonetheless, there was a lot of anxiety in the market. One of the narratives out there, of course, was gold and silver are overbought. They've hit silver's hit this all-time high. It's over. The run, the bull market is over. Now, of course, as we record the show today on November 11th, the price of silver is back up around $51 an ounce. So, Jerry, I ask you, how do you feel about the roller coaster ride? Are you feeling a lot more comfortable? Do you think your clients, and do you think people who are looking to get into the market are feeling a lot more comfortable being back above 50? And what does it say to you for going forward?
Yeah, definitely going forward, we have to reassess whenever you have these types of this type of price action being overbought technically, but the market is well supported with us clearly entering into a rate cut cycle, not just here in Canada, but in the US, even Europe. I know they stayed neutral, but at the same time, we're also supported on the silver side. Last week, Friday, was the big news that silver is now included in the Department of the Interior's critical minerals list, along with copper. So this is something that means it's going to be supported. The government will not sell silver. You cannot sell a critical mineral, and we have to replicate and do the same thing. And this is a floor. This is a floor for metals. The demand is coming in, not just from people. It's not you and I. Yes, we do buy precious metals. Our clients are getting involved. They're buying into, as Daniel Galley said from TD, you could buy into the silver stock out. This is one way of doing it. You're getting involved, but overall, I think we're setting up. If we look at the chart, there's a very interesting chart from Dow Gold equals 1 that came out today. Silver looks like it may confirm that 45-year cup and handle breakout this year, though there's plenty of time left. The 2025 annual close is going to be a very big deal, one way or the other. Measured move, according to Dow Gold equals 1, to the measured move to $660 area with a possible trip to the upper channel rail of $1,000. And it's a very clear, it's a 50-year chart. So when you pan back from on a chart, you clearly see the trend. And there's a very interesting resistance where we hit today at 51.50. Keep an eye on these levels. Support obviously around the 48. We could pull back even further, maybe 46. But either way, we understand our reasons here. We understand that currencies are in trouble. And we're going to park your money right now.
Well, one of the things about you mentioned being a critical mineral is the usages for silver and the usages moving forward for silver. And it appears, at least from just the smell test and anecdotal evidence, just from my own perceptions, is that we're kind of moving from this overly financialized world, the everything bubble of services, and nothing really exists. And what did we learn through the pandemic? Oh, you need stuff, and we need stuff to be built here. And we'll see what happens with the agenda in Canada of building in Canada, while the Prime Minister is 97% of his portfolio is invested in the U.S. I digress, of course. Look, one of the things is that with regards to silver, it's used to make stuff. And one of the ways you can get inflation down, right? So you get this balancing act between having already printed the money and having the dollar devalue, but also getting cheaper goods, right? You got to get the cost of goods down. And one of the ways you would do that is energy, getting energy prices down. And so while the Green New Deal, windmills, I said that very strangely, windmills and windmills and solar power, it's great, but it's not exactly efficient. Nuclear power's become a lot more efficient. And silver expert Jay Stager reveals a nuclear silver secret. This was put out on X this week. Nuclear plants are silver devourers, he said. Each large reactor of 1,600 to 1,800 milliwatts requires 3 to 5 million ounces of silver. Silver control rods are irreplaceable. They regulate nuclear reactors. No button press magic here.
Nope.
These rods require periodic renewal. As of right now, China has 23 reactors under construction. 30 more reactors are planned. The U.S. is also planning the same to do the same. And so there are effectively, over 100, I think, planned over the next little while. So ultimately, where this is leading, and this was put out by Make Gold Great Again, who was commenting on this. There's 440 nuclear plants currently in operation. So think about those rods. And 170 reactors being constructed or planned globally.
Yep.
That's 82% of the annual silver mining alone. So you holders and stackers of silver are sitting on a gold mine right now. Absolute gold mine. And there is no doubt, we hear it every day from Paul. There's nothing out there. You can't get the product. And I find it interesting that a lot of these online dealers are almost giving away their product, and I understand why. It's because I'm speculating, but I just kind of feel it. I think they're dealing in the retail market, the walk-in off the street, and people don't have the extra money to spend because it's all going to inflation.
That's right.
Right? So they're forced to lower their prices, and lower prices beget lower prices. But you have to be able to appreciate how rare this product is, right? They only mine 500 million a year. That's it. It's all being used. We're in a deficit. There's a reason silver's up over 50% this year, 70% this year. And so is it possible for silver to go to 100, as Michael Oliver says, or could it go to even $200 an ounce in these circumstances? And lastly, before I pass the mic, because it's time, Jerry, the fact is that you don't. If the price goes up, you don't need less silver in these nuclear plants.
That's correct.
You need the same amount. It's just going to cost a lot more. So these plants are going to cost more over time, unless they can try to get those the material now. This is just, it's all coming together. And that's just one facet. That's not talking about, AI and, any new technologies coming out, health services, medical industry, military operations, military usages. Like
it goes on.
It goes on and on. How are you going to enter the
crazy.
new world without silver?
I know.
And yet you have all the central banks buying it, and now you have India. You mentioned last week India's like monetizing silver, that they're starting to hold it
for their banks.
This is explosive right now.
12 years ago, I started here. These were not the fundamentals. The fundamentals were always supply and demand, yes, but we've never had this. We've never had the new space race, as you called it last week. This is on. The new currency war is metals war. It's resources war. And I believe this is the positioning and hopefully the way that wars are fought. On this Remembrance Day where we remember all of the soldiers, I mean, we do want to honor them at this moment. They protected our nation, our sovereignty, our identity, values. The fight is still on. And, whether the maple leaf on your flag or the maple leaf on your gold or silver maple, we remember you, we honor you, we thank you for your service. But as our country today is planning a different agenda for 2030, our country is in a different place. And one of the soldiers, I think it was in the UK, said, this is not what I fought for. It's actually worse off today. Where we have China leading the nuclear charge with 23 reactors under construction, and you mentioned that you need about 3 to 5 million ounces of silver a year to control, for the control rods in these nuclear reactors.
Just to keep in mind, there's 32 million ounces, 32,150,000 ounces in a ton.
Right.
Right. So out of a ton, that's 10 reactors.
And think about what he said. Jay Stager, he's a silver expert. He says by 2025, this year, could mark the first year in history, that silver stockout, where 100% of global mine supply goes to industrial use, leaving nothing, zero available ounces for the investors. This is, I can't fathom this.
Well, I can fathom it, Jerry, because I can tell you from personal experience here, from what we've been hearing inside the industry, is that over the last couple years, as everyone has been forced to sell their silver to keep up with inflation, do you know that product would normally, the secondary market would be rotated as other people are coming into the market. For every buyer, there's a seller. However, in this case, what's been happening is all of that's been just melted down and brought back to industry, brought back to the bullion banks, and brought back into melting it down and making 1,000-ounce bars. It is not going to the public.
Yeah. The
public is being left out into the cold, and the public is out in the cold in terms of knowledge as well. Okay, great, they're talking about it a little bit on mainstream. Hardly.
No.
Hardly at all.
You need to go visit Silver Wars, guys. You have to understand this has been going on a long, long time. Going back to during World War II, the Manhattan Project, when the United States raced to develop that nuclear bomb. Copper was too scarce and they had to go out to get silver. They turned to silver, and the U.S. Treasury quietly loaned out over 400 million ounces to produce the Manhattan Project. And then, long story short, the Department of Defense stopped reporting on silver. Check out Silver Wars, guys. From the Manhattan Project to this nuclear power race, silver has powered civilizations. You cannot have a civilization without silver. It's the most transformative moments probably in history. This is remarkable. The shelves are becoming empty. The premiums are starting to rise in the smaller stuff. It's starting to get tight. Deficits, 6-year structural deficits coming out of the ground. Less and less silver ounces available. This is the silver squeeze. This is real metal, real scarcity, real money. And you're listening to The Real Money Show.
The number 18778-SILVER, the website guildhallwealth.com. Learn how to get involved in the physical gold and silver market, not paper. Own the real thing. If you can't hold it, you don't own it. If you can't hold it, then you've got an investment. You don't hold an asset. You don't have a high quality liquid asset. You have an investment. You've got counterparty risk, and that means that there's no guarantee to give your product back. There's no guarantee to pay you back out. I gotta tell you, Jerry, I'm a kid of the 80s, okay? And whenever I hear about the technology that silver uses, I always think about the movie Flight of the Navigator. Do you remember that?
Yes.
The kid
Crazy.
goes into this like UFO spaceship, and it's all silver, right? And I always just think, yeah, it's
so creepy.
Well, a little bit, but when you think about every year around investment time, they'll put a gold egg on a cover of the magazines, or they'll always talk about gold standard, and that's how you represent wealth. And when I think about technology, I really feel silver represents technology.
You're right.
So I think about that movie. I just thought I'd throw that out there as
silver. The silver Walkman in the 80s. I think that that really resonates with me. I loved.
Or Terminator when he turns into melts into silver.
Yeah.
It's not silver. I don't know what that is. But anyway, I digress. Let's keep rolling.
That was a good digital time. They're introducing digital era. We really embraced digital in that era. And we just become more and more digital. I don't know about you, Jeremy. We just immersed ourselves in AI, and it's something that I'm kind of backing out. I really want to go back into just have normal conversations anymore. I think there was a speech that was used by the Liberal Party this week. They just used ChatGPT. What is real? We have to embrace
the
real.
giveaway is always when they say it's not this, it's not this, it's that.
Right.
Like always creating that
and that extra
comparison.
long dash. Exactly.
Yeah.
But you know what? People are asking today, what is money? And in the last segment, you mentioned, where else should we park wealth? Going into yields, we're chasing yields. If we go back to the real way of how inflation was calculated when they actually included mortgages, when they included gas and power and real world stuff, before they rejigged it in 1980 to bring that inflation rate to a neutral 2% so they can offer you a 4% GIC, or now it's 3.5 or something like that. Really, are you fighting back from inflation? No, you're not. Where else can you put your money? According to the Bank of Canada Museum, prices increased an average during the 70s, 8%, as high as 12.7. In 1980, it went down to 2. And according to Trading Economics, the deposit interest rate, the GICs, averaged 5.6%. So at the end of 1 year, you're still down 3 to 6% after holding and wasting 1 year of your life holding a GIC.
Yeah, what it is that if you are getting 5-6%, you're mitigating a lot of the losses, but not all of it. So it gives you the chance to say, I'm doing well. My stock portfolio's up. But at the end of a decade or 2 decades, you realize you haven't gotten further ahead.
Right.
There's no way you're getting a raise every year of 8%.
Not after a fight.
So you can
in the cold.
You can chase yield all you want. You can say my home is my investment, etc., and you can try to mitigate some of the losses, but it's not getting ahead. Now, there are times where you can get ahead. There are times when there's the new thing comes along, pot stocks or AI stocks, things come along, the dot-com bubble. Will you get out in time?
Right.
Will you be safe enough in getting out? I had a client recently, spent 10 years in the market, sold off everything to pursue another, what sounded like a quick turnaround investment. I personally, if I was spending that much time into the market, and I'm not selling any gold, first of all. I'm not selling anything for anything. In fact, I'm looking at I have very little stocks as a portfolio, and I'm looking at that, trying to figure out how to rotate back into metals, because I feel like gold is so easy to get to 8,000 and silver so easy to get to 100 before we even reassess.
Right.
The way we're assessing right now and the way that Joe Public is assessing right now on the silver market, they're looking at silver saying $50, $50. Well, we're there.
Yeah.
Okay. It hit it. It went back down. You didn't get a chance to say, well, that's it for the market because it's right back above $50 again. And even if it goes back down again, it doesn't matter. We're here. This is the new level. We've talked about the deficits. We've talked about the demand. There is no doubt the prices go higher from here. It's not an if, it's a when. Okay. It's not a, well, anything can happen, Jerry. Mm-hmm. No, this is a studied response. Okay. And we know that the market is revaluing gold and silver monetarily and industrially. The financializing of it through the paper exchanges.
Over-financialization, that's correct.
Where they have a little bit of product, they rob Peter to pay Paul, and then they finance the crap out of it and manipulate the markets. Those days are we could say they're over.
That's right.
They're basically over. It's not like they don't get to continue to have a say, but it's basically over. It's the Allies have marched into Germany. Mm-hmm. Okay, it's over. Mm-hmm. There may be skirmishes, but it's over. So, to me, the moving forward in the precious metals market is so exciting. If you can hold on to your metals, you should try to hold on.
Yes.
And if you haven't gotten into the market, you should do everything you can to get some allocation. Now, we're not your advisor. Speak to those you trust. We're also not saying it's a panacea. It's not the answer to everything, but man, does it look good.
It does. It does, knowing that during that time, during the 70s, while you were averaging 5% with a GIC, while inflation was around 8, gold during that period averaged 10%, 10.5% over that time. So you're fighting back. And talking about parking your wealth and positioning in gold, we are not sellers here. We're not even close to the top. According to John Flynn, just today, he said it currently takes 140 ounces of gold to buy an average Canadian home today. For the past 15 years, it has ranged between 200 to 300 ounces. The lowest level in 1980 was around 95 ounces. These cycles rinse and repeat because all we're dealing with is your currencies. That Voltaire said, paper money eventually returns to its intrinsic value of zero. You're asking what is in the bank. You mentioned it. It's just digital ones and zeros. It's their liability, the bank's liability. You are an unsecured creditor at the bank. That balance in your bank account is not cash sitting there waiting for you. It's just digital. And in any liquidity squeeze, bail-in, emergency policy move, those digits can be frozen or quietly devalued overnight. It's happened before, and this has been proven to be their strategy when push comes to shove. Now, the Bank of Canada is on a downward spiral to cut rates. They're racing to do that. Negative real yields are locked in. Gold has outperformed the TSX in housing since 2000. Put that in the bank. Your gold, and it's done that without leverage, without risking your money, without counterparty risk, and without surveillance. This is private. You could take it home. You could dig a hole, put it in the ground, put it in the cinder blocks and drywall. We have clients all over the place, and they've taught me a few things. They've been through, the former communist regimes. I learn a lot from our clients, Jeremy. It's just been a pleasure to meet with people who love and embrace freedom as we do in Guildhall and want to position yourselves for success. And that's what we're here to do at Guildhall. So you want to get in touch.
The number 18778-SILVER, the website guildhallwealth.com. That's for asset ownership. That's real money, not currency, not a unit of exchange, not just ones and zeros in a bank, but real money, a store of value. That's something gold and silver have been doing for individuals for literally thousands of years. The number again, 18778-SILVER, the website, guildhallwealth.com. At Guildhall Wealth Management, we help clients to own physical assets, real money like gold and silver, as well as natural fancy colored diamonds. These are resilient assets, very rare assets, the best kept secret of assets that are out there. For gold and silver, we help clients you can acquire it directly, you can take it home, you can give it to loved ones. You can store it in a vault facility like Brinks to have it fully allocated and segregated, held in your name, outside the banking system, ease of liquidity, take home delivery whenever you want, audit your own product. This is the best way to have large amounts of physical gold and silver protected and secured. As well, we also offer it within registered accounts. This is, to me, is one of still the most interesting vehicles out there and unique vehicles where you can own your own physical gold and silver held in a vault facility outside the banking system, but still part of your retirement portfolio. I love when clients convert to RIF accounts and LIF accounts, and as their payment, they decide to take in-kind delivery of their own gold and silver. It's always a heartwarming thing as we move into the colder months. Also heartwarming are yellow diamonds, just like the sun. And as we've been watching over the past couple years, a battle between the natural white diamond market and the lab-grown market really go at it. And one thing that we've always said about the real natural white diamonds is that they were never really rare.
Correct.
They're a luxury. They were always a luxury item. And when it comes to luxury items, you know, Rolex makes like 1 million watches a year. They're not exactly rare, but they're an expensive, expensive luxury item. Mm-hmm. But with the natural and the labs, they've overproduced them anyway. So now they're literally giving them away in some cases.
Yes.
So, you know, when you think about romance and you think about getting married, you certainly wouldn't, you know, acquire, you know, throwaway fashion. You wouldn't exactly want that for your piece that you're going to get engaged with.
No.
And a luxury item's nice. That can have that. A luxury item can certainly have a sentiment. But when you're talking about something really interesting and beautiful and romantic, you think about something like a yellow diamond, right? Mm-hmm. Rare, beautiful, distinguished, really stand out in a crowd. Obviously the value of it is resilient, right? You don't experience the same sort of issues you have with the natural diamond market. Talk to us about yellow diamonds, Jerry.
You know, just knowing that they offer that low correlation, it's a low correlation asset that is decoupled. When we have the conversation about bonds, is the bonds a safe haven? And, you know, there was the New Orleans investment conference this past week, and Mike Maloney was questioned, is bonds a safe haven? No, it's not. It's a very dangerous thing. The fundamentals, where you have credit being downgraded, currency about to being flooded, you're looking for a way to get out of currency. And at Guildhall, knowing that of every 1 million diamonds that are mined, only one of those is a colored diamond, but that one colored diamond meet Guildhall's strict criteria of calling this a generational piece. A diamond that has a story. A diamond that is going to celebrate your marriage and last. It should last. It should not be something that is not rare. If you're going to put something of value on your wife or your husband's hand, it has to be rare. And this is something that you can celebrate and pass on, knowing that this is a legacy piece. I don't have to involve the government bureaucracy of lawyers getting involved. Just pass it on. This is what generational wealth builders have done throughout generations and years and decades. And, you know, the Florentine diamond resurfaced after 100 years. What a story. And it was thought to have been lost after World War I in Austria, from the Royal Habsburg family's collection. And where was it found? It was found in Canada in some vault.
Wow!
Right. So these stories with and that was a yellow diamond. And at Guildhall, I spoke with a client just today who bought a few years ago a 1.52 fancy, intense, flawless yellow diamond. He called in, provided him with a market update, and he wants to put that into a piece. And at Guildhall, we offer wealth to wear. You can wear these heirloom pieces. Men can wear them on the pins for if you're into suits.
Yeah, lapel earrings, cufflinks.
These are pieces that you can wear and enjoy. They just don't have to sit there like your bullion does in a safe. You could wear them, wealth to wear. You want to get in touch and find out more about finding out just to find if a diamond can complement your hard asset portfolio, you want to give us a call, to book your own diamond discovery session today and request the Diamond Investment Guide. We've been doing this since 2002. They've been a trusted safe haven opportunity for my clients. It's been a great learning lesson. We have GIA professionals on staff. We don't need to outsource and get those professionals to find out what is rare. Let Guildhall do that for you.
The number 18778-SILVER, the website guildhallwealth.com. So much exciting things happening in the hard asset side of the world. Precious metals have done wonderfully already, and we still have a month and a half left in the year, but what a year it's been in the market, and still so much more to happen in this market. We're so excited for the future of gold and silver, and we really want people to participate in it and get in before it's too late, before it just gets out of everybody's grasp. I think silver still has opportunities. It's still cheap enough, right? It's still economical enough before it gets to $100, maybe even $200 an ounce. We'll see how it goes. We'll keep looking at, the value of the metal has to be something that you can conceptualize in your mind. And maybe right now you can't conceptualize 200, but certainly $70 is starting to become a reality.
Yeah.
We can start to visualize the $70 mark, $80 mark in silver. So there's a lot of good things happening. Give us a call. The number 18778-SILVER, the website guildhallwealth.com. If you've missed an episode, please catch us on YouTube or Rumble. Follow us on X. You can even catch episodes on Spotify and iTunes. Love to hear from you. Jerry, thank you so much. Thanks to our audience. Can't wait to speak to you next week here on The Real Money Show on 640 Toronto.